Today we've seen some absolutely crazy markets, and I want to discuss a little bit of what's going on, why this is happening, and what I'm doing about it. Let's go ahead and jump into today's video. So today is absolutely crazy in the markets. We have the S&P 500 down 2%, the NASDAQ same thing, the Dow Jones also down 2%, the Russell's down 3%, and the VIX at the time of recording this video is up a whopping 50% on the day. The dollar index continues to sell, and metals and commodities are not all that much better. You've got gold down 1.5%, silver down 4.62%, and WTI oil down 1.4%. You're seeing a lot of crazy volatility here today, and I wanted to discuss a little bit of what's going on. And for the crypto traders out there or investors out there, may you rest in peace. Today is a rough day, and I'm one of them, so I'm not making fun of you in any way, but huge slide in crypto. In fact, if you're somebody who watches Bitcoin specifically, Bitcoin at one point this morning touched as low as 49,000. So absolutely crazy just to see the volatility swings there. Currencies are also very volatile today, especially the dollar yen. Look at this, guys. Dollar yen down 2.25%. Of course, don't get confused by this concept. It's the yen actually up a lot. It's just that other currencies are getting hit hard relative to the yen. And stocks are under heavy pressure basically because of the fear of a potential slowdown or even a recession on the global and on the US front. However, this morning we did get ISM Services PMI, which was a little bit better than expected, so perhaps there's something to hold on to. In today's video, I'll give you my thoughts on everything, so let's get started. And please remember, just as we get started, during these very highly volatile events, a lot of people are making a lot of money or losing a lot of money. What I would implore you to do during a time like this is keep a level head and trade responsibly. I'll be leaving a clip at the end of this video from a conversation that I had with Chris and Frank, my two fellow traders that come on the live stream each day. We discussed this at length, being a responsible trader during this time, so that clip will play at the end of this video. So first up, let's talk a little bit about this S&P 500 drop that we've seen. Down 2% at the time of recording, but it was down much more than this, as much as 4% on the day earlier in the trading session. And this was really brought on by the sell-off that happened in the Japanese stock market overnight. We can actually see, if we take a look at JP225, this thing has dropped a whopping 21% in just a few weeks, which is absolutely crazy. The US stock market seeing some carnage from this as well. And gold doing okay, but still getting beat up today. I want to talk about all of these markets, and I wanted to start with the dollar index. The dollar index is our guide here because it sets a precedent, because a lot of traders are very confused today. They're saying, how is gold down and the stock market down, but the dollar is also down? Well, this is because this is all based on recession fears. Now, recession fears are basically a slowdown in the economy, hiring slows up and spending slows up, company earnings take a hit, all of these bad news bear things, right? So the dollar index is lower today off of following through on Friday's NFP report, which came in much lower than expected. Job openings continue to trend lower. And if we take a look at monthly jobs added, aka NFP, non-farm payroll, you can see that last Friday's report is what spooked everyone so much. 114,000 jobs added compared to the relative 176K that was forecasted by market analysts. So this big slide in jobs data has the market on edge about a potential recession. But I do want to just push back on the idea of, this world is going to fall apart for a second and talk a little bit about GDP growth, services manufacturing, etc. So GDP growth beat estimates and came in at 2.8% growth relative to the 2% that was forecasted. And although it hasn't updated on the Edge Finder just yet, services PMI actually came in beating estimates at 51.4, I think it was, just slightly above expectations and showing some mild growth in the services component of the economy. What's not so hot though is the manufacturing data that came out last week. Manufacturing PMI came in and it missed expectations, which also spooked the markets. However, something to mention is that company earnings overall in the last round of earnings season, which we got a lot of information on last week, a lot of companies actually beat estimates. And so perhaps there's a little bit of buy the dip mentality coming in as we hit this key level of support on the S&P 500. And if we take a look at some moving averages, we didn't quite make it to the 200-day moving average, but perhaps we're trying to hold this 100-day moving average in purple. If you're somebody who watches gold, we saw a big dip on gold this morning, but buyers stepped in very quickly to buy the dip right around this 2370 level. You can see a huge wick off the bottom here, and perhaps some demand for a safe haven asset like gold is pretty strong in this time. You might say, well, why did it dip in the first place? But remember, we've been talking about this a lot. oftentimes if there is a concern about global margin or recession fears, people will sell everything, including gold, to raise cash for possible bigger dips that could occur in stocks, in real estate, and everything else. So gold got a little bit of sold with everything else this morning effect, but again, buyers came in quickly, and I do think that that will continue. So if we do see dips on gold, I will be a buyer looking for opportunities to build a position and go long. So we'll see if we can get that sort of set up for us again. Looking at the moving averages on gold, you can also see that the 50-day moving average held beautifully this morning. Price came down, tapped it briefly, and shot back up. If we do get a bigger push down to the 100-day moving average, I do think that that could be a really decent buy the dip opportunity. Speaking of dips being bought at the time of recording this, take a look at the Russell, which has been dropping off the face of the earth, giving back all of its recent gains, but then a long wick off the bottom of this candle here, showing some strength coming back into this market. Now, you may be saying, Nick, are you buying this dip yourself? And I do want to just say that I am a buyer overall, but I'm being very cautious because I've tried a couple attempts at getting long on the NASDAQ already, which have not worked out very well. I've risked small, so I haven't been getting killed by this, but the recent pullback has caught me by surprise a couple different times. So I'm being patient, and I want to see how this candle closes. If you get a long wick off the bottom here and we close with some strength, this could be a potential sign that the market has found a bottom for the time being, and maybe we rally a little bit higher. But if you close anywhere near the bottom half of this candle, I get a little bit concerned that we may go test deeper and try out that 17,000 level for the NASDAQ. For currency traders, the euro dollar has broken to the upside, showing a lot of strength there, which I think is interesting. You've got the pound USD trading lower, dollar yen continues to fall, and if you're watching the dollar yen, this is a huge level of support. This 142 level was the low that was made back in December of last year before it ripped much, much higher from there. So for dollar yen traders, watch this level, because if you're a bull, let's see if this thing can hold and perhaps start to break higher through these levels. And if you're a bear, let's see if this thing actually breaks and closes underneath, which could signal more downside and more pain in the short run for risk assets. Here's my dollar Swiss trade, which this thing is actually running to the downside. This has been the only thing that's been really killing it in my portfolio recently, which has been shorting dollars against Swiss francs, which of course this makes a lot of sense. The Swiss franc becomes in high demand when the market is getting really scared because of its risk off or safe haven currency status. So the Swiss franc, again, getting really, really strong right now alongside the yen, as market participants are a little bit fearful about what's going on in the world, about perhaps a bit of a global economic slowdown. And those risks are materializing in the form of dollars and euros and pounds being sold relative to their Swiss franc and yen counterparts. And here's the pound yen, a good example of a very risk on or risk off currency pair. This typically moves higher in risk on environments like we've seen for a lot of this year, and much, much lower very quickly during a risk off environment. By the way, I wanted to mention, if you are looking to get access to our trades being shared, they are being shared inside of our Discord channel, which there is a free version of our Discord and a paid version. You can find all the information for that down below in the description of this video. And just for context, this is what this group looks like. So I share all the trades that I'm taking, why I'm taking them, so on and so forth. I trade FX, commodities, indices, and even stocks and ETFs. So we also have Frank in here sharing his trades, and Ivan as well. So we've been very, very active in here, and will likely be very active for the remainder of this very volatile week. One thing that is concerning is this move lower on silver, 4% down in a single day. Oil down 2% almost on the day. This is showing that the market is a little bit fearful of a possible global slowdown. And I mentioned the topic about the Swiss franc and the yen getting bought, and you can see who actually was really buying it was actually smart money. So when we take a look at the commitment of traders data, which shows us institutional net positioning, you can see where they're at. And they've actually been very short on the yen for most of this year, but I've been slowly watching the yen come off of its lows, and percentage of buying has been rising. We can see that drastically in this week's week over week filing, where they bought heavily the Japanese yen and the Swiss franc. This is like the third straight week that they've been doing this. They added a lot of long contracts to both, and more importantly, they drastically reduced their short positions. Perhaps this is a bit of a short squeeze going on in the yen, where the yen keeps going higher, causing more and more people to cover their shorts on the yen, causing more and more people to cover shorts on their yen. So seems like a bit of a short squeeze happening in the currency world, which is quite scary and quite a real thing. At the same time, we saw Russell being bought, which is interesting considering it's been sold so heavily on today's price action. Take a look at the Dow, the S&P, get the NASDAQ trading lower. It's a wild day out there. And in terms of smart money, they seem to be heavily selling some of the more commodity and high risk currencies like the GBPJPY GBP, AUD, NZD, CAD, and even the dollar getting sold on the week over week filing. If you'd like to get access to the Edge Finder, you can get access for 30 days using our trial feature, which is linked down below in the description. Or if you have any questions or you'd like to purchase the tool outright, the first link in the description will connect you to a real person on my staff who can get you hooked up with a copy of the Edge Finder, as well as some nice current discounts that we are running. Check it out down below. If you feel like right now you're like, this is devastating to you, then the cold answer is that you were too leveraged, that you had too much size. But to your point, Chris, about survival in a time like this, if you're like, okay, I've been dead wrong, but my account's not destroyed by this, then you should be patting yourself on the back and saying, look, I survived drawdown effectively. And that's all you can do is trade, because nobody can see the future. Nobody knows, oh, tomorrow the Bank of Japan's going to do this, or Israel and Hamas are going to go at it, or Iran is going to do this. And nobody knows that for certain. There's just too many uncertainties in this world. So all you can control as a trader is your position sizing, and you can be modest with your approach to the markets. You know, I've given back gains, but I'm not destroying my account by leveraging the crap out of it. So and then you have traders like Frank, who's been on the right side of this move. He's been buying puts and making money on this move. And you know, you just mentioned, Frank, you're looking to scale out. Actually, let me ask you that. So with your puts that you've got, do you have anything left? And the ones that you've cashed in on, what's your kind of approach to managing all those puts that you've got?
Yeah, so the ones that were expiring today, I had to close out early because the move was so large. I have a bull put or bear put vertical on the Qs. It's at 450. I bought a call, and 430 I sold a call. So that's a 20-point move, but it's for Friday. So I got it at 581. It's trading at 1059. So I'm not really sure at this point. Like, I've taken profit, and now I'm wondering if I should just let this trade run or take the 80-something% profit that's here. I'm sure Chris would say take the profit, but you know, with a move this big, it feels like if this continues, I could manage like the whole 20-point move by the end of the week. But
yeah, and I think that's the key here is for anybody who's listening, whether you are bullish, bearish, whether you like gold, whether you like the NASDAQ, whether you like Russell, silver, oil, whatever you are trading, the key takeaway during a time like this, I think, is just hold, have your opinions on what the market's going to do, but don't destroy yourself if you're wrong. The first question I think that, any good trader asks himself is like, if I'm just dead wrong about this, what am I going to do? Because there's no certainties in the market. So if you're like, okay, I don't know what's going to happen for sure, but I have a good educated guess, take your educated guess, but appropriately size it so that when you're like me and you've been wrong about the NASDAQ for 2 weeks straight, you're not getting destroyed by it. You're just dealing with it, and normal drawdowns are going to happen to everybody. So
well, the biggest problem is closing out. And that's when you're in profit. Don't get greedy. Take your profit if you're happy with it. I wouldn't say just sell out as soon as you're in profit, but if you're happy with what you've made, like this morning, I think I got very fortunate in this move. I was just hedging myself against severe moves like this, and it happened to work out today. But it usually doesn't work like that. So knowing when to close out is good, because you can see especially in options, you can see your trade go all the way back to where you bought it at, and you can lose money at the end of the day too. So closing out is important. Nick, you were in NAS and you got out of there before this huge drop too. So it's like managing wins and losses, making sure that you're not staying in something too long or too little. That's the hardest part, is closing out, because people see these tremendous gains and don't know what to do with it, and they get comfortable in this, and they want to see more and more, and then when it doesn't go their way, they don't make as much money, or they lose money, and then they quit trading or something like that. So it's
almost like It's almost like you just want to be responsible, and whatever your opinion is, be responsible with it. You know, if you're bullish and you know, the market's made a really good move in your favor, be responsible with that move. Maybe trail a stop. Maybe, you know, make sure your position sizing is not too big. If you're feeling, you know, incredibly good on a day, then, you know, here's a lesson I learned, Frank, recently. Oh my gosh, I made so much money on that day. And I did take a little bit off the table, but I held majority of my positions and I didn't trail stops. And hindsight 2020, but I gave back so much of that incredible day on the following sell-off that, you know, kind of occurred. So I think it's just, you know, be a responsible trader, especially in times like this. You'll thank yourself later, because when the floor falls out from beneath you and you're just wrong about stuff, you're going to be glad that you didn't over risk. Chris,
And don't
anything
be
to add on
loyal
that?
to a trade, because the market is not loyal to you. It wants to take all of your money.
That's it.
So when you're happy and in profit, take the money.
If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.